Hello, welcome to Mortgage Mythbusters, episode 11.
Episode 11.
And as usual, we'll start with allowing a bit of time for the new jingle.
Just let that play for a bit.
Awesome.
I've heard that there's drums and bass done for it now.
Is there?
Mm-hmm. Yeah, drums and bass are done. The rest of it's just obviously in post-production, isn't it? So it's on its way.
Basically, we've got no jingle.
We will have a jingle.
He's going to put a jingle over the top after I've talked about knowing we don't have a jingle because we don't have a jingle.
Why you said that you just listened to the podcast back?
I was waiting for the jingle.
Is that what you do?
Yeah, and there's no jingle.
It's pathetic, isn't it?
So last week's podcast was you need a deposit to get a mortgage, and we busted it wide open. We didn't do it really; the media did it. The mortgage media did it, and we talked about how Skipton had introduced a product that allowed the opportunity for some people to qualify for a mortgage without a deposit, and we.
It still seems a bit strange to me that there's not it's just all risk on the lender, but. Yeah, it sounds a brilliant thing.
But that's you all over, isn't it? Risk, as in the Bank of Barry. Like even if it was 50%.
Well, it is. Yeah, too right.
So this is great because we'll bring Faz in on this.
Yeah.
Because Baz asked about 1 million questions after the podcast last time. So Faz is back with us today.
Yeah.
He's popped up from Chorley. We've all had a bit of time to digest how the market has reacted to it, how customers, the media. But it's good to get. I mean, we've already had a chat offline, but it's good to get Faz's take on it because I was very positive and still am. But there's some quite rightly there is some restrictions which I think Faz will touch on.
The main restriction I think is it's just going to be so beneficial for a lot of people based on where you live and where you've rented because. Around the northwest, rents are relatively cheap compared to what you're looking at further down south, for example. And you could rent a terrace property, which a lot of first-time buyers trying to save would go for the cheaper property to have enough surplus funds to be able to save for a deposit to then eventually get on the ladder. And if you go for a property that's you can get a two-bed property for maybe £500 a month. And they've been renting that in the hope to save. Now this product's come along.
So you'll only be able to lend that. You'll only be able to pay that back a month.
Well, yeah, because one of the criteria points is that the mortgage payments cannot be
more than rent.
£1 more than what rent you've paid for the last 12 months out of 18. Right. So, and it would be hard going to find a house cheap enough to buy with 100% mortgage where the monthly payments, as young as you are and as long as you may stretch the mortgage term. Would be less than 500, maybe £600 even.
So with that, then you would hope that those people had been putting a bit to one side, but you live to your budget, don't you? Maybe these people.
You do, but
can't afford that.
It would be nice if they could open up the criteria, maybe to say that we can evidence because they are going to troll through 12 months of bank statements to evidence the rents, the bills have been paid, and if there's a clear evidence that every month each applicant has also been, let's say there's two of them. Putting £200 a month into a Help to Buy ISA, for example, I think that budget for the mortgage payments should increase by that much because there's now no longer a need to save for the deposit.
Good point.
Is there any sign of something like that coming in? I think, or would that maybe be something the competition would do? Or?
A little bit too early to tell, and because nothing's happened. We've had a customer that the amount they could borrow just wasn't enough to make them kind of take this next step into I'm going to now look for a property, which is fair enough. But if that customer had been from a different geographical location, that could have been well within, like London, we know it's going to be.
And could that customer have afforded more?
So yeah, they could have. But again, it goes back to Faz. It's like, how do you prove that? But if you've got 12 months proof of rental, it's that. How much is that excess income? And we don't know what went on in their life at that point. It might have been. For all we know, they could have been helping out family and paying for their shopping and things like that,
But it could also be that they've just got really lucky and got a really good deal on their end.
Absolutely.
You know what I mean? Or it could be someone who they know, or you don't know, it could be anything, and they could be really living somewhere that they could easily afford better, but...
Well, this is it. I mean, the good thing is it's going to bring people into seeing rented as not the end of their cycle, because people avoid rented because they think, actually, this is impossible because I don't want to be paying someone else's mortgage. When actually they might see rented as an opportunity to get on the ladder for 12 months to prove and to trial living in a property. And if they can do that and they have the knowledge, then by the time they come to buy the property, then
Absolutely. Don't get me wrong, it sounded negative what I was saying. This is positive news for the industry. It's been one of the best things I think that's come out this year in the industry press, and it is a brilliant product, and there will be many people that benefit from it. And I agree with you, Paddy, if it puts people in a position where they are happy to go and rent for 12 months to then qualify for not having to save, because saving for a deposit, it must be so hard, particularly in the current climate.
Yeah.
But for the ones that are willing to go, and I think it's great experience for people, first-time buyers in particular, to rent.
And to see how you do come on
used to paying your bills.
Like, would you be confident in giving Christian 20 grand in 10 years' time for buying a first house when he's lived in the bedroom? Bearing in mind he's never, like, he might have a good paid job, but like that to me is the risk of Barry, because you're giving him 20 grand if it doesn't work out, because he might have to come home because he can't afford it. To me, the 12-month rental is proof that you can afford it. Regardless of what deposit you put in, because some people will be able to save, and it's just a good like life experience.
But the other thing is as well, it's not, you're not having to cut your life out in effect. So you're not saying, oh well, I'm going to resign myself to living in my mum and dad's house for a year so I can save up for a deposit. What you're doing is you're getting out there, being self-sufficient, living on your own, which is what you want from your house.
Yeah.
But while you're renting, so then you can get on this scheme. So it's quite good that it's like a year. You're doing it a year earlier than you would. So it's quite. The good thing is,
it's a safe bet for the lender, because they're kind of allowing them to do it very well, kind of contained, and they're not giving them much room for manoeuvre, like as in just estimating how much they could afford more. They're doing it on a fact. They can afford that for 12 months, so they can have a mortgage.
They know what gas, electricity, council tax bills are, not just over the summer, but in the winter periods, because they've gone through a winter for the last 12 months.
I mean, people's electricity bills will be more than some of the mortgages, won't it?
Let's not go that. Don't go down that route.
So it's not a bad time. It's just a safe bet, I see it as, and I'm looking forward to it helping everybody. I think this is what Faz is alluding to. Not just those who are overpaying in rent in London. And that's where we need to.
But there may be a downside as to where you are geographically, as to how much.
It's just that there's potential geographical restrictions with certain areas where rent is relatively cheaper to other areas. But don't get me wrong, I think just one of the best things about it is the positivity in the market sentiment it's sending to say that banks are willing to lend 100% to give the confidence to people to come back in and start actively looking at properties and buying them.
I wonder how many customers are going to approach the landlords and ask them to put the rent up.
But it could, you don't know. It could though, couldn't it?
But some people, the last thing you wanted to, but then it's deep in criteria. Like, as in, if they've had 6 months at a higher rent and 6 months at a previous, what are the lender going to do there? How are they going to assess that? Because we didn't ask the landlord to put the rent up, but he did, and I could afford it. Yeah.
But then, so like last week's podcast, we had Charlotte in, and she was like really buzzing for it. It was a really positive podcast towards it. So it's just good to know that there are a few things that maybe could be changed, or like you say, other things. There are still slight restrictions on it. You know, it's a balance for you, isn't it?
I'm sure in time it'll evolve. Maybe if it needs to be a bit more flexible, as long as it makes sense. So again, the logic behind what I would say is, if they've on top of the rent comfortably saved a certain amount every month religiously over the last 18 months for 12 months of it, why not include that in the overall affordability calculations?
What we touched on, because there are people that will probably be looking at this scheme and have worked for 3 or 4 years saving 15 grand to buy their first house. The good news about this scheme is, depending on their circumstances, it allows them to potentially use some of that money for the property that needs home improvements and stuff like that. Like the one that they've seen that they like, and actually the bathroom needs doing, but they have no more money because they've had to save that for the deposit. So it allows other people, not just the 0% savers.
But you also said at the time in your last time that so say you didn't have enough deposit for the house you'd seen at 95%, there's now 99% and 97 and 98%. So you might just go into that bracket now. So it might not just be the 100% that's great for you.
Because that's what I asked. Why 95? Why that figure? You know, like why? It's a good milestone. It's an easy way to price products, but on a property worth 200 grand, what is the difference? And if they're taking the risk at 100, the thing is they've done this wisely, because they have almost made sure the person can afford it. That's the good thing. What they can't control is the what if with the property prices.
I think that's been the challenge for any first time buyer, because house prices, they say, went up 10%. and you're trying to buy an average priced house at 150 grand, that extra 15 grand to try and save a deposit for that, it's a continuous, you're constantly chasing, because how much can you afford to save every month, especially with everything else going up constantly. It must have been an absolute nightmare. So products like this, brilliant, because it gives people the opportunity to, you know, not have to constantly chase that.
Yeah.
But what I touched on, I don't know if you'd read the press, or I listened to Skipton talk about their product, and the figure that they gave was that if you bought a house 10 years ago versus rented it, and identical payments, so the mortgage payments versus the rental, what actually happened there was the average house price grew £70,000 in 10 years. So that's 70,000 that me and you didn't. We could be on the same income. Perfect life. Both of us, just one of us had a helping hand from a parent, and the other didn't. Also, the amount of mortgage payments you'd have made and the capital that were reduced, you'd have talking over £100,000, that magic money that you'd created, wealth, within that property that you didn't. And that's what we're hoping, and the bank is hoping, that they've hit a niche and a gap in the market that doesn't exist. And that's great, but we can't tell until 10 years' time.
So you're saying that rather than, as you said earlier, like sort of dead money going, paying off someone else's mortgage, you're saying that's money that you've made because that's your house and it's gone up in value. So basically...
You can't guarantee it'll go up in value like that, but when you look back 10 years...
But it has over,
And that's what the person is missing out. Under no difference in circumstances, apart from having the luck that a family member was able to gift them or loan them the £10,000 deposit. That's the difference it made in terms of an average increase in value.
Crazy, isn't it?
It is.
So with that, I obviously was coming at it from Baz Bank and saying like that risk is all there, but it's still a normal risk that you've got getting any mortgage, that you still have to make the payments. They can still take the house off you.
The risk is higher for the lender, because when the bank comes to take the property back, if you don't make those payments, they're not going to put it on the market, wait 3-4 months to see, you know, if somebody will come in with the right offer, go straight in the auction, get as much back for it. So that's where lending 100%, the bank does stand to lose.
Yeah.
So,
but as the consumer, as the person that's buying it, you've still got all the risks that you would have had with any other mortgage.
Your house may be repossessed if you do not keep up without repayments.
So this links into links into today's podcast, which is the myth that we're going to bust is that you don't need income protection. Okay, and it's a great way, because as an advisor, if you're put under pressure and someone says, "But how can you make sure that that person can afford that mortgage?" Well, maths is one thing, and affordability to calculate. What we can't control is the what ifs and the things that can happen out of our control. Yeah. We can mitigate that by insurances, and income protection being one. So the myth of you don't need it, like we can bust that wide open and say, well, you do. Everyone does. Every single person would need it, because you don't know. And unless you can fast forward in your time machine and prove that you don't need it, then the myth can be busted wide open.
So it's like anything. There will be exceptions. I want to say you knew that you had inheritance coming, or you knew that you had this coming, you knew that you had that coming. But I mean, this totally, what I've just said there is totally against my thoughts, because I am proper risk averse, and I would be thinking to myself, do whatever I can to cover the. I'll think of the worst case.
So why wouldn't Barry make his mortgage payments? What things could stop you?
Get a sack. Get a sack. Well, not.
So what would you do?
I mean, lose my job, basically.
If you got the sack, what could you do to allow you to continue to make your mortgage payments?
Well, you'd have to. Apart from having some kind of insurance in place, do you mean?
Yeah.
It's interesting you say that, because when you start talking about this with clients, one of the things that people are more receptive to or open to, and it's hardly done these days, especially since COVID, is redundancy cover. What's your biggest worry? I'm worried about being made redundant, because there's talk around places of work of are they cutting back and there's going to be redundancies.
Well, that's the way of the world at the minute, isn't it? It's all you hear is bad news.
But so if you get made redundant, you have an option or the ability to still go and get another job, whatever it is, menial job that you don't necessarily want to do for the rest of your life, but you are able to still generate an income to maintain your commitments, your mortgage payments. And it goes back to what Paddy says with the what ifs. There's some what ifs that you can still manipulate and control. It's the ones that you can't, and the ones that really put you in a position where you can't do what you want to do.
Illness or capacity kind of thing.
Yeah. So you've
Yeah.
lost. So you've lost your job because you've lost your job. So
Yeah.
depending on your circumstances, there'll be some sort of redundancy package. But you could just lose your job and walk out and not get paid and need another job. I know it's easy to say you could just get a job elsewhere, but you can. You might have to lower your standards and expectations. But when you there's one solution. It's going to be difficult.
Could you, with most lenders as well, and I know you've mentioned this before about mispayments and stuff, a lot of them are receptive to you and they would maybe change your payments and
the first
work with you.
you'd contact them and talk to them. That's what we advise everybody because lenders are so varied, but they'll listen to you. They've got to. Got to. But what you can do is go out and get another job, is what Faz is saying, right? So there's
what I'm
plans.
saying is, say you went out and got a job, say you had a really good job,
Yeah.
it ended up, and all your money was spent every month, you didn't have any savings,
And then you've got to drop
you had to
your
go
wages.
back and get a lower paid job.
Yeah.
So you would be struggling you could ring them and say, look, this is what's happened. Could we work on it?
The lenders, if you're if you're in
Kinda-
dialogue with your lender and keep them up to date with the circumstances, they have an obligation to work with you to come to a solution because repossession is last resort. As
Yeah, of course,
nobody really wants that, not even the banks, genuinely.
No.
But even with that option where they'll say, okay, for 6 months we'll reduce your payments, that potentially, depending on which lender it is, will be an arrangement to pay on your credit file. So for the next 6 years, if
All
you
right,
want
okay.
so
Yeah.
it would affect potentially your credit file depending on how the lender reports that arrangement. We've seen it on credit files,
Yeah.
you know, arrangements to pay.
Right.
And it can seriously affect your ability not just to get more than mortgages but other bits of credit because anybody doing a credit check on you can see that you've struggled to keep up with those mortgage payments. They don't know the exact circumstances as to why, but that's how the system works, the credit check and the algorithms. It's the biggest, for me, income protection is the most important because it's the one thing that can really affect that house of cards falling down so quickly.
So what is it? Right. This is me coming at a basic point of view. Is it the same as buying a telly, taking out what this? So like your protection in case you smash your telly. Is it basically that?
Let me
Is it
give you a
like
better analogy. This is
tell
the
me
way
what
I
it is.
always explain it because a lot of people, particularly first time buyers, have not even heard of income protection. So I'll always position it this way so that you really understand what income protection is and who it's protecting. Say you buy your new house, and on the first day of the month in your new house, you walk downstairs into the kitchen to make a brew in the morning, open the fridge, and there's a brown envelope there with £1,000 in it. And you think that's a nice surprise. Make your brew, go upstairs, get on with your day. Next month, first day of the month, you go downstairs, get the milk out of the fridge, and there's another brown envelope with £1,000. This goes on for months and months. And you get used to that £1,000. It becomes part of your day-to-day kind of expenditure. Then you think, what if next month I come down and that £1,000 isn't there? And I come along and say, give me £40 a month and I'll make sure there's £1,000 there every month. Would you give me £40?
Yeah.
In a nutshell, that is income protection. Why wouldn't you do it?
Good analogy that.
So there is,
Right,
but
yeah,
there is a gap to highlight there. So 50 grand a year job, you lose it, and the only job available to walk into is at your local wherever, and it's 20 grand a year. So you've got a huge decrease in your income coming in, but it's better than nothing. But your other things that you're going to look at, so you're going to speak to your mortgage lender, who probably can't do anything immediately, okay? Because other things that aren't secured need to take, priority. So if you smoke, you drink, you go out, you eat out, all of those are going to have to stop until you can get into a position where those what we would call luxuries kind of can come back into the equation. Your gym memberships, all those things, the tangibles, the Netflix.
And if you've got dependents, obviously as well, they'll come before anything, won't they? So
Of course, but you'll have to like cut karate lessons down, things like that.
Yeah.
So you would just do what a normal person do when you go into survival mode. We would hope, and not everybody will, have what we call the deadline to breadline fund, where you've kind of got a bit of savings that you could ask. So it's like your own form of income protection. This is where it's interesting because we're myth busting something here where there's an open discussion, and it's not that me and Faz sit on a different side of the fence. I think it's because I'm self-employed and so is Faz. But how I view income protection, I view it from my personal point of view, and it's what would keep me out of a job. I could get sacked from my own job. My customers could decide not to use us. That's that's part of being self-employed, whether you're a builder or not. Builder, dropped it in.
Here we go.
But it's kind of, to me, it's like kind of, you've got to look at every single risk, and your risk receptors would be huge, because you would have every single opportunity, and I could probably squash them by saying that'll never happen. You'll walk into another job, but it could. You'll walk into another job, but then you've got things outside of your control, So that's losing a partner, you've got being ill and off work where you shouldn't be at work, so you're going out and get another job. Yes, I've left this job because I couldn't do it anymore, because I can't manually work outside anymore. And I've had to. There's certain times when you could have an illness that you should not be at work, and you should be there, and that's where income protection can kind of come in. There's professions where if you're off work, you get paid. So if you work for me, you don't get paid when you're off sick after a certain number of days. If you're a teacher, you're a fireman, you're in the ambulance service, whatever, there's a much bigger kind of period where you will get paid. But it's mitigating that risk that does exist. So by drawing that big circle of risks and highlighting the gaps where there isn't any solution, which will be losing your job and not being able to get the same level of pay.
Yeah.
That's a risk that we just have to live with. What would you do? Get a bar job and a job? What would you do? You'd trade your car and get a cheaper car. All those things that you could do, but it's going to be painful. Where income protection comes in, and it's such a great tool, is to me, it takes the next step of protection, the first rung of the ladder of protection, of what would I do if I was off work 6 months without, just on statutory sick pay. That's the gap I need to now concentrate on, and that's where income protection.
It's not just that. Don't take this the wrong way, but if you die tomorrow, you're better off dead to your family if it's a long-term illness. Because if you're dead, you've probably got life insurance. Yeah. It's that cheap. I'll come on to the pricing of it.
I was going to ask about the different ones,
the point I want to make is that if you're dead, you've probably left a little something. You're no longer here with us. It's a shame you've gone.
Yeah.
If you're really ill to the point where you can't go to work, the chances are you may need looking after, which means your partner in the household may need to take more time off work to look after you. You're going to need regular trips to have treatment and all this kind of stuff. And eventually you'll start, hopefully, getting better. But when you go back to work, if you've got no income protection, you're rushing back to work, the chances of falling ill again are significantly higher. And the chance of doing yourself some harm long term is higher. So even proportionate pay benefit. So income protection policies generally these days come with proportionate benefit, which means if you have to go back, ease yourself back into work 3 days a week until you're ready to go back 5 times, there's a proportionate benefit paid so that you're not financially out of pocket and you can fully recover before you then go back to work.
That's a massive thing that I'd not thought of.
So do you not have income protection?
I have protection with you. I don't know what it's called, what it is, but it's basically to cover me if anything happened to. I think it was if anything happened to either of us, it would cover. Was it critical illness?
Yeah. So there'll be a reason that we went down the line of that. So with work, and obviously if you're off sick, you'll have a period where you would be paid, and then you have to weigh up, and there's a calculator that you can punch into. Many providers have it, but they're readily available, and statistically it'll give you the chance, even for a healthy person, how things could unfold.
Is this what? And this Joe touched on this. I think it was fairly scary.
What are the chances, basically? So if you,
it's terrifying.
And this is the thing as well. And it's the risk is determines the price. And the cheapest policies are life insurance. The reason why I think life insurance is sold more than any other is because of lazy advising, because it's cheaper and easier to sell.
Right.
The next cheapest would arguably is critical illness. The most expensive is income protection. Because statistically, the chances of you being off work, short, medium, long term, are far higher than death. And the consequences to a household, whether it's singular or a household where there are dependents, it's the biggest risk, I think, to any household.
Right.
But it doesn't even have to be that expensive these days, because we had a meeting, I think, don't quote me on this, but it might have been Royal London with some claim statistics, but whoever it might have been. But the average claim on an income protection long-term claim was 21 months, which for me was interesting because...
So you're saying they needed the payout for 21 months?
Yes, until they were either fit and ready, signed off to go back to work. Now, one of the best things that happen to income protection to make it more affordable is what's called limited payout periods.
Okay.
So generally, you'd take income protection out and you'd cover yourself until, say, your mortgage finishes.
Right.
Or retirement.
Or retirement,
Okay. Yeah.
depending on your circumstances,
Yeah.
needs, whatever.
Yeah.
But that is a lot of payments potentially, because you go off work 6 months later, for 20 years, that insurance policy will pay. So it can be very, very expensive.
So you're saying that if I take it out for 20 years and then I had to use it, I was seriously ill, had to use it for 2 years,
Yeah.
and then went back to work 2 years later, I was off again for 2 years, they pay again.
Yes.
Keeps going
I
on,
mean,
so-
without getting into the criteria
No,
in terms
yeah,
of conditions, you'd have to be back to work. I think it's for 6 months in full capacity, and it might also exclude a repeat.
If you have to claim again for the same condition, you don't have to wait the deferred period. But we're getting very technical on that.
Yeah, but it basically doesn't just cover you once to be
But
off
there is
one.
a policy, so you
Yeah.
could be, so a teacher could be, they could have an income protection policy which kicks in when their income is reduced, which is normally about 6 months for a teacher. It might even drop down to half for a further 3, but let's say at 6 months it cuts
Yeah,
off.
yeah,
But that could be stress. How you can't measure stress.
No.
Right? So technically that teacher could have taken out a policy to pay their income protection until they would have retired or the term they'd chosen, which is a hell of a lot of money to pay out for the insurance company.
Yeah,
So
yeah,
if we're a betting company, we would make them odds really low because we wouldn't want to be paying out and skinning ourselves. So we'd run it like a business. So statistically, the likelihood of payout is income protection because more people have illnesses that are kind of, whether it would be related to muscular, just being off with stress, anxiety, or just short term. Whereas critical illness is something less statistically likely to happen because it's a serious thing like losing a limb or eyesight or cancer, heart attack, stroke. So when Faz is talking about the kind of the tier or pyramid of likelihood of risk, income protection is something that can happen to everybody. Because it doesn't matter what you do, stress, anxiety, depression are a big thing, and you could be off work for a long time with that. Where it works from a commercial point of view for the income protection, I mean, because that might sound appealing to be paid your income for the next 60 years to someone who's just started. Well, actually, it's not a full. So say you walked away with £2,000 a month in your bank. Yeah, every month you get paid. They're not going to give you £2,000 a month as income protection.
Right.
They're going to base it roughly on about 65%ish.
Roughly, every provider's different.
Or how much you want. Or how much you want. You could just cover your mortgage payments.
Yeah.
You know.
Right. Okay.
Again, it depends on the circumstances, and you do the full advice process at that stage. But yeah, it's going back to what Paddy was saying about the risk to the insurance company. If you had £1,500 benefit to be paid to you, benefits are tax free for now. That over a 20-year period is potentially a £360,000 payout that the insurance company would have to pay out if you never went back to work or if the doctor signed you off for good. But the two, and that's why it can be expensive. But when you quote full income protection, it puts a lot of people off. But the 2-year or the 5-year limited payouts, based on the fact that average payouts was 21 months for a major insurance company for long-term illness, people being off work, it's a no-brainer for me.
Yeah, because it's a risk that's proven and it's the most common payment period. So,
And it provides the best safety net for single individual households or a household with dependents.
So explain that to me then. So what does that mean? You pay less for this, but you're only going to get paid out for a certain amount of time?
Yeah, you'd still have, let's say, 20 years of cover for of £1,500 a month, tax-free. But if you go off work, and again, we're not getting too technical about deferment periods, but when you qualify for a benefit to be paid, it pays until you either go back to work, the doctor says you're fit enough to go to work, or the 2 years finishes.
Okay, so it's 2-year maximum
Per claim.
Per claim.
But multiple claims within that, let's say, 20-year period that you've got the cover for. So you could go back to work after 18 months, work for 6 months, you have a car crash, you need to be off for another 4 months, put another claim in, you get paid for 4 months.
And what if it turned out you had something that was...
So rather than, just to impress you with my quick maths, that would be 36,000 over the 24-month period that it would pay out, rather than 360 if you're off forever. So the insurance company's risk on the amount of payout they could pay is less, so therefore the premium they can charge is a lot less.
But that safety net that it provides you is, for me, the peace of mind is...
But what happens if you have something that lasts for 3 years or 4 years, what happens then?
Then really the best advice is taking income protection for the full term of what you need to be covered for.
But then when you're saying, so how I would go about this in it, so let's just use rough figures for argument's sake. So let's say it was £20 a month to have £1,000 of income protection for a 24-month period. For the rest of your life up into retirement, that may be £50 a month. Yeah.
Maybe a bit more.
Maybe it's a bit more. So let's say it's 3 times as much, 60 quid a month versus 20. Now, that's a lot of money to pay a month for never to claim, because also, I know the statistics are there, it's also very likely that you will never need to have income protection. Also, if you've got a big deferred period, like 6 months, it's also very unlikely you'll ever be off for an illness for longer than 6 months. So you can always play devil's advocate, because you would be the worst type of client, because otherwise you'd walk out, take everything. And believe it or not, as financial advisors, we're not just in it to make money. I'd rather you use that extra money to pay off your mortgage early, or take the kids to the ice cream van once a week instead, because that's living your life. But what we need to do is have that peace of mind and make sure that you have weighed up these risks, and actually, hopefully it'll never happen. How much can you afford to spend per month, and be happy that you may just waste that money, because you'll never claim on it. You'll never die. You'll never have a critical.
But it's the same as you
never have income protection.
Say that, touch wood, your car insurance and any insurance, I suppose. You
don't get me started.
You only realise the value of it when you need to claim.
Exactly.
Absolutely.
Exactly.
Like you said,
And people would choose not to have car insurance if it wasn't a legal requirement. All day they would choose not to. You would just be driving around. It would just be mayhem.
But I think for these, very, very valid question, by the way. What happens if I've only got a 2-year limited payout, but I've got 3? But you at least have 2 years whilst you're ill of a safety net, not to have to financially worry about. You've got your illness to deal with, and your incapacity.
So it's taking that worry.
And it also buys you the time to, if you know it's going to go beyond, 2 years that you can't go back to work, the time to make adjustments to your lifestyle, your family's lifestyle, to be able to cope without having that stress of, letters coming through the door, you've not paid your mortgage.
You might have so you say it's going to be a lifelong illness that isn't a critical illness, but it's affecting you going back to work. So we could call that stress or anxiety or depression. Is an easier example, because you're off for 2 years, 24-month point, you didn't take that extra policy because 60 quid was too much of your budget, but 20 was fine, and that money's going to stop. You've had 2 years of that to adapt and control to that less of an income anyway, but also it's 2 years to potentially look at thinking, well, not day one, but retrading, going to college, extra study, looking at what is out there, self-employed, because you might not want to work for people. So we would have hopefully adapted.
And there's so much support provided by insurance companies, the ancillary services that a lot of them offer. There's help with CVs,
Really?
to get, because they appreciate people have been off work long term. They may have actually made those decisions that Paddy's just on about, but need help putting their CVs
I've never
together.
thought of something like that.
Yeah.
They're trying to get you back on your feet. Yeah, you
they want you back at work. They want to stop.
Yeah. But from that point of view, they totally do. But you just see them. When you sort of Joe Public, you just see it as they just want to take your money and not.
They're looking. You presume they're looking at ways not to pay, don't you? That's
exactly.
There's loads of stuff that you can have physiotherapy and sessions with some of them that they pay for. You can have being off work long term affects a lot of people's mental health. Being at home stuck on your own, then mental health support. There's counselling you can have. There's so much that comes with these, and you can take out a cheaper 2-year limited policy, which costs, let's say, a third. You still get all those ancillary services that you can rely on. That
are there as well.
As well.
So you mentioned there, if it wasn't critical illness, so would you? I can't remember what you were meaning there, but am I right in thinking that your critical illness, would you buy that as well as income protection?
So this is where the £20 and £60 kind of conversation was going, was if you're thinking, actually, no, I'm worried and I think this might happen. Well, we haven't actually talked. We've got life insurance. You paid, so let's call that £10 a month for that.
So that's if you die.
So we've covered that, and like Faz said, that actually, sadly, financially, you will just get back on your feet, because it's the decision factors is taken away. You're going to have to get on with life. You will. It won't be easy, but you're going to have to. Whereas if you've got a policy £10, so we've eaten into your budget and we're giving you an option of 20 to 60 and you're panicking thinking I'll take 60 because I could be off forever. Of course you could. We hope you're not going to be, but you could. But actually, if I'd rather cover you for the 24 months, which proven covers the statistical data that says that's the average claim, we've now freed up £40 budget. And for critical illness, which actually, if you are off for longer than 2 years, there's a bloody good chance that there's something seriously wrong with you. Bearing in mind, income protection would still pay off if you were off for cancer. But actually, 2 years, are you going to be guaranteed to be better? No. Whereas critical illness cover would have paid out a lump sum.
Right. So what? And is that?
So when you're worrying about it, you being off work for longer than 2 years, barring stress, anxiety, and depression, and maybe it's muscular, then critical illness bridges that gap in a way, because if you are off for 2 years, it's going to be something serious, you would think. And hopefully, if we've taken the policies and done our job right, we've kind of covered for every area, other than that gap over the 2 years.
Without having a crystal ball, it is impossible to say this solution is definitely going to work for you, because nobody knows what's further down the line. The best thing you can do is, as a client, is think about what I should be receptive to and putting in place. And the advisor's job is to, within the budget that you have,
find
the solution that kind of covers as much of the event. In an ideal world, everybody would have income protection, critical illness, life insurance, redundancy cover, the lot. But it comes down to budget.
Is critical illness more expensive than?
Well, it's relative to the amount you want to cover. So no, you could have a policy for £10, but it would only cover you for 10,000. So it's if you want bags and bags of it,
but that gives
it's going to be expensive.
So you were saying, so roughly, say well, if we go back to the 24 months and we said it'd be like 36 grand in effect you're getting put into your account.
Yeah.
If it was critical illness.
Yeah.
That would pay. So that gives you a lump sum though. It doesn't pay monthly. That gives you a lump sum. Would it? They wouldn't just pay you for 2 years worth.
It depends what amount you choose. So that's our job
income benefit
to work
with critical illness, can't you?
Yeah.
So you can have similar, but
right. I just didn't know if there were different products or if it was part of one of the products. If you see what I mean.
It's kind of our job to say how, because some people would say, I've got life and critical illness when I took out my mortgage, and it's £100 grand mortgage, and over 25 years they've actually taken it on a decreasing basis. And do you know what? If you had a critical illness, the last thing I would want my customer doing is running to the bank and giving that critical illness payout to the lender and saying, I'm not paying £400 a month now. That's not what I would consider critical illness's main job is. I would rather them look and think, right, how is this going to affect my lifestyle? And can I afford to use that money to potentially bring in a nanny? Can I use that money to get my stair lift fitted? Like, that money is more about your lifestyle and getting better, because I've seen it used. Sadly, critical illness is something we as advisors have to, not sadly that we work with the customers, but it's a real life conversation that when we write policies and get people mortgages, and we've got thousands of customers, they will get critically ill, they will lose their jobs, they will die. When we see the effect it has, and it's normally someone you know, and it is the fact that you get told that, and the first thing you think about is finances. Like, if I had a critical illness, my policies are, being an advisor, I'm not sure what we've never discussed what your policies are, but you know what mine are, because I've talked about it. If I was to suffer a critical illness, it would be shit. But financially, it wouldn't even enter my mind, because
you're covered.
But I've covered myself to a ridiculous extent. Even when I probably couldn't afford it.
Paddy hasn't hovered over his landing whilst Heather's been behind him for a lot of years, because he's worth more dead to everybody.
But it's more the critical illness, because it's me and my wife. Because
it's weird. I don't think that would be something that you would, the way you are. I'm not saying you're a bit gung ho where you are.
I am, yeah.
But I wouldn't have thought that. I thought you'd be like, I'll be alright.
But because I'm responsible. Like, and to be honest, I'm not really bothered about myself. I'm bothered about what would happen if something happened to anybody else. And it's all good protecting me so that Heather would be actually... But if something happened to Heather, I don't want to have to think about running this business. I want to be able to say to Faz and Ian, right, here's a pot of cash to get someone in this seat and do my job. I'm going to go and be a dad.
Which I think that's the way you explained it to me.
Yeah.
It's not just like...
But how much... That figure even I've got isn't enough to see me through the next 20, 30 years. It's enough to get the kids to age 21 when they still need money. And
if you think it finishes at 21, you've got to think coming, by the way.
Cheers for that.
So like to me, it's kind of, I've scared myself because of the job we do of thinking, actually, what would I do? And the budget I had to cover my bear in mind I've done it a long time ago, so it would have been a lot cheaper. And the budget I had was if Faz had worked out my budget for insurances, then and I went with that, then that would have been a sensible thing to do. Instead, I panicked myself and took more than my budget would have allowed. But actually, I'm glad I did now. That doesn't mean I want my customers to take that lead. No. I'm acting on the way that I feel, because I now I've got a real peace of mind about if anything did happen financially, I've looked after my family.
Everybody's different and everybody's circumstances are different, which is why, again, like, good example, you probably never knew about the 2-year limited.
No.
A lot of people, when you explain to them, especially the analogy of the fridge, and exactly, I know it's pathetic, but
no, but it gets it in your
head.
A
lot of people say, yeah, I want that. I would pay £50 a month to have that product. But then when you start doing the quotes, it's a bit out of my budget. But then you can always tailor it to still give them something, because my belief is something is better than nothing. That 2-year safety net, I think, as a must for anybody that has a job or has an income, should have it. You get a lot of objections from self-employed people. My income goes up and down. Will the insurance company actually pay? One of the beautiful things that happen, or good things that happened, is for self-employed people, their incomes do go down. So a lot of people that are self-employed, particularly with stress, they tend to work less. Sole traders in particular, because they're stressed, they're not as active, they're not willing to get up to go to work. Their income comes down. So they've had income protection that they've paid for. But when it comes to claim time, the insurance company says, can we see evidence of what you've earned in the last 12 months to warrant paying you this amount?
So that's dropped off.
And if it's come down, they're actually not going to. But certs of Exeter, great income protection provider. And there are others available on the market, but for impartiality reasons. But you can fix your benefit. So at the time you take the policy, you evidence them the income that you have to them at the time. If and when it, and hopefully it never does, but when you put the claim in,
you'll get what?
They don't ask any questions.
Right. Yeah, because income protection for self-employed is a little bit different, as in, like, you'd be off work today sick and you just physically wouldn't be here. But as a business, I suppose I'm going to earn an income still. Is that why? So what you're saying is that until I started earning zero, in a way, I'm not really off sick because it stopped. So my health deteriorated over 24 months.
More so in particular, and it's. But again, I've used that as an example because insurance companies want to pay. Their claims statistics that they publish every year are really important to them. And I think one of the myths that does need busting is, do insurance companies actually want to pay? Because the general consensus out there to the general public is they're always trying to wrangle out of pain.
Yeah, that's exactly what, if you'd said to me, that's exactly what I would say. Without having any evidence, a bit anecdotal evidence maybe, but
yeah, because it takes one person to have their claim queried who goes to the Sun and makes a big deal out of it for a little, and then everybody reads that that insurance company didn't pay, they never pay. They're paying millions.
But that's more scary than if they weren't paying out, really, because if that's stopping people taking it, and I've said this before with other things with you on this, it's all down to education, isn't it? It's all down to when I first started doing your work, doing Paddy's work, all the things that you concentrate on at the time were getting these things out. You know, you pay X amount for Sky. Have you got yourself covered? And I never ever thought of that. I mean, I'm looking at some here in the office, and like, I would never have thought of that. But as soon as you start then engaging that conversation, and then he's saying to me, what if this happened? What if that happened? Don't be just thinking of it like that. Think of it, take yourself out of the equation and think what would happen with Ellen and what would blah, blah, blah. And I think the education is what people are needing.
And that's where we sleep at night because we do our job right, because we don't make people take it. When someone doesn't take an income protection policy, I don't just say, all right, okay, next. What I do say is, I tell you what, you know that £40 a month, stick that in a savings account every month instead, and hopefully, if you're not off sick for the next 10 years, you'll have a pretty good pot of cash there, which is now your own income protection. It's your savings are income protection. You come to me and tell you got 50 grand in the bank. I'll not look at income protection as a priority, because if you're off work sick, you're going to be using that money to be able to stay. But £50,000, we've just demonstrated 2 years can be gone quick.
So if you say that you go through all this kind of stuff and you're obligated to go through this when you get someone a mortgage, is that the same with a remortgage?
Yeah,
absolutely. Just what I was thinking there is, I mean, a lot of people, especially the way it's gone, economy wise and stuff like that, a lot of people were saying that they wanted to just get the mortgage down, get that sorted so they know what they're paying. And I know a few people who've gone for like 10-year mortgages. It could be 10 years before they think about doing that again, and that's a bit of a worry. So I think is I know you do, obviously.
So you mean it's someone that says no,
and
it's not 10 years.
It might not be till 10 years that they reassess it. They might have more money then.
I mean, we've got. It's not even an obligation. Like there are customers. We stay in touch with our customers. We've got to, whether it's through just communications, newsletters, or just social media is a good way for us to remind.
I was going to say you do on Facebook and that you do put these things out, these kind of marketing.
But
campaigns,
no, people kind of do only sort their finances and admin out when that milestone comes. But what actually triggers the in-between is something happening to one of their friends or family. Have I got this? We get an email from a customer saying, did I take critical illness?
Well, this is exactly what I'll be doing after this. I'll be asking you what
and I love saying yes, and I hate saying no, because when you say education, it's not just about what it is, it's educating them about what they could have, and then them being solid enough in their own understanding of it to go, I don't need that.
Yeah, yes or no. Yeah.
Happy with that. I'm happy with that because it is a risk, and you could be right, but Jesus, if you can afford the Sky TV and a football ticket, then I know, don't get us wrong, I want you to go and see Preston and enjoy that because you've got memories.
Didn't enjoy them the other day, did you?
It's painful watching Preston North End.
But there is other things that can come before that ticket needs to be the £60 a month for that season.
And people just need to be educated about their priorities, and ultimately they have to make an informed decision. And our job as advisors is to nudge them in the right direction, inform them of what's available, and also the potential risk of not doing anything about it. But it is a hard job. When it comes to the insurance side, it is a hard job because.
But when I came to you, I didn't know what I had. I knew that I had like death in service or whatever with my job, and I knew that I was covered to a certain extent. I knew that Eleanor was covered to a certain extent with her being a teacher, but I'm one of those who, if I thought about it, I would have just worried myself sick. And I think I just put it to the back of my mind and think, oh yeah, we'll be fine. Come to you, and I'm saying, well, I've got this and this. And then Paddy's like, well, that's not really covering you for this. And I think it's that, it's understanding what you've got. It's understanding what needs doing.
100% right. I speak to people, in fact, it was only the other day, I spoke to somebody who was paying £16 a month to L&G. And they said, I'm all right with that.
Might be me. That's similar to what I was doing.
What does that actually cover you for? They have no idea.
No,
I'm saying for £16 a month, the likelihood is that's just a life insurance policy. No, actually, I'm pretty sure it had critical illness. I'm thinking, no, it won't.
I had one that was coming out, and I asked you about this, and it was called PPI. I'd never claimed for it or anything, and I didn't know what it was called because this thing was coming out of, I think it was coming out of the joint account that we have. And it was coming out regularly for X amount of years, and we still didn't really know what it was.
I think the PPI scandal put a lot of people off insurances.
I've said this to you on one of the earlier podcasts. To me, it terrifies me, and you think
we've had family find out like you did that they were paying PPI, and then it wasn't so much go and claim because you didn't know you had it. It's not all necessarily about missold,
of course,
because there was a need for it, 100%. They went back and they actually said, oh, well, I was off sick at this time. I had the policy, but I'd never claimed, and they got a claim from it. So it's
backdated kind of claim?
Yeah, because and it was an old policy that was sold, but they were still paying for it. So they had it, and I think they may have actually been off work, at the time. It was a family member of mine. And they went and it just covered the mortgage payments, but they still had it.
Though, isn't it?
But they didn't understand because it was all in the news. PPI make a claim. They hadn't made a claim because in their head they were sold something that they was solid, and it was one of these ones, Faz, where it was attached to the mortgage. So the mortgage company were making you pay them to protect you, so that they always get their payments, which is nuts. But it did pay out, so there was a need there. So it's not always the bad press because they don't tell the stories. People are just looking to basically say, I paid something for that I didn't know. Whereas with life insurance, and critical illness, I have the conversation 2 years later, customers will say, I don't know what I've got, because they were concentrating on that house. And the funny thing is, they almost play that Jekyll and Hyde. Can I get this house, please? I can afford the mortgage, I promise. Here's my bank statement, here's my income. I've got the budget to be able to afford £700 a month. Okay, £30 a month for life and critical illness insurance, can't afford it.
Yeah, we'll give you a mortgage for 600, but we'll want another 30 for the insurance.
But then something happens, and the lender, for whatever reason, we need to make a change, and we go to another lender because, I don't know, the property downvalued or something like that. The new mortgage payment is £730. Fine.
No questions asked every time.
So it's people's perception of, I don't care what you're going to sell me, and I do it when I go into DFS.
It's almost like an add-on.
I go in, I buy my sofa, the guy says about this magic stuff that you put on, and he's like, and you add this on. I think that they're just trying to do a sale.
That's the next PPI scandal, by the way.
Yeah.
See, I'm a sucker for that.
The sofa protectors.
I'm a sucker for that.
But building and contents insurance, which is just for your house, and the very basics, if it floods, gets broken into, or burns down, then you're protected. The add-ons that make the policy £2 or £3 more expensive than the one they found on Money Supermarket, to me, when people don't claim on an insurance, it's crazy. When you've got kids and you've got a carpet that's been ruined and things like that, that's what protection is for.
We had this same conversation only a couple of weeks ago, didn't we?
And income protection, to pay £100 excess for a £1,300 carpet, to me, that's what protection's for. So people take building and contents and they don't claim. I'm even all for now claiming. I think fear is being put into you from the car insurance with, I've got no claims discount. I've got, if I have a car accident, I'm not going to pay out my own pocket. I'll go through the insurance company and I'll claim because I want my money back. I want my money back. I know it's going to go up, but I want my money back. But
see, I never think of it like that. And I said the same to you. I said one of the kids had smashed an iPad, and I said, I'm going to have to blooming look into what we can do with that. And you said, are you going to claim on the insurance for it? Well, I never would cross my mind. Honestly, that payment comes out and I would never think about using it. And that sounds absolutely daft, but it's just because I just think it's almost bred into you to kind of think it's for...
But an iPad's 1,200 quid, and if the kid's dropped it, smashed the screen, you take it to get fixed in the screen, it's going to cost like, say, £200-300. The insurance companies now have built products, because this is probably one of the most popular claims, where they'll cover you for that, for a different type of excess and a different type of cover.
Do you know the mad thing is, we're talking about protection for an iPad.
Yeah.
People are far more receptive to protecting those kind of material things, whereas without you generating an income when you're well enough to provide those things, none of that will be there. But when you strip it all back and speak to a client and go back and say, without you, none of that is there. That your buildings and contents that you're now so willing to insure. I can't afford that, but you're the cog in the machine.
Well, we've been kind of almost brainwashed in that way. I think it's been made that sort of the way society is, that not that it's frowned upon to claim, but you don't. Oh, you'd be all right. We'll find another way around it. That's the last thing that will be coming into my mind. And to be honest, unless I was really struggling, I probably wouldn't even think about me illness cover. Do you know what I mean? If I was off and had no income for a couple of months, I honestly would think for me it would take a couple of months for me to kick in and think, I could actually be claiming for that. I know it sounds stupid,
it's
but
very rare people fall through it. We get calls day in, day out. We need a mortgage. I'd like a mortgage. I'd like life insurance. I want a policy. Because somebody's died, passed away, left dead, whatever the reason is. It's rare you get a phone call from a client who's been referred, say, I want some income protection. And I had one not so long ago. I shouldn't laugh, it's not funny, poor guy. He was 50, HGV driver, and he got COVID.
Right.
He now has long COVID, but he was in a coma, induced coma, for something like 16 weeks. He came out, he's had constant health issues ever since then. And he now wants income protection, and he is uninsurable. So until all of this happened to him, he was invincible. Now he wants, he's made the first move to say, I need this. And it's painful going to them and saying, you almost want to say, you should have had it when you were a bit younger, when it would have been a bit cheaper, and there were no exclusions. But now I can't even get you. So some people always say, well, I'll think about it when I'm a bit older.
Yeah.
When my bones start to...
That's all you're thinking. You're thinking, I'll think about when I'm ill.
You do that. You put everything off until you're older.
And I'm the worst for that. Like
Tom does this, right? Tom Insurance online, and they're very good on social media, and they put the and it's not influencers, they put the Eddie Halls in front, they put successful Vinnie Jones, and they talk about the need for life insurance, and it hits home with me. I mean, if I didn't have it, I'd buy them off it, because they cut the bullshit and they just talk about what would you do if. And what I've noticed and what we're very good at, and Faz isn't a good salesman, that's not his job. I know it covers under sales, but it's making you understand it. And I already did. So my job was all about how I perceive it, and what I do. So I educate my clients based on how I feel and let them know how I want to cover myself and how they should cover them. But realistically, when it comes down to everything we do, we're doing it because we don't want them to ever be in that position, and we're doing our jobs right. And new customers that come in, I almost make it a challenge. If they're buying a property and they've never bought a property, the biggest thing I can do is put the protection in place, because the ones that don't take it or don't have it are not my customers. They're the ones that have come through and like, oh, Paddy, I've heard you're really good at mortgages. I need to remortgage because rates are going up. And I'm looking at their file, and you ask the question, do you do that? Well, I notice you haven't taken any insurances. No, I'm fine. I discussed that the first time. Go back to that broker then. Go and speak to the person who did your mortgage then. Just because you've spoke about it before doesn't mean you still don't need it. Let me do my bit and educate you. So let them think it's a sales pitch. But I'd happily say, put your money in a bank and save that instead. Or go on Money Supermarket and get a life and critical illness policy. Ring the other companies that are always on telly.
I think they need to understand as well when you have that appointment with the clients. Honestly, every time I speak to somebody about insurance, before I even start explaining what insurance is, I say, I'm not going to sell you anything. If you don't want any of it, you don't have to have the only insurance that is mandatory is your building insurance. You don't even have to cover your iPads through your contents insurance if you don't want to. But give me a little bit of time to explain to you what I think you should have in place and make my recommendations. And I think sometimes that puts people a little bit more at ease, that they're not going to be told that you have to have this, you have to have that.
So it should really.
I always say you don't have to have any of them if you don't want to. But why wouldn't you? You know?
Well, that's the answer to the myth is, I don't need income protection, but why wouldn't you? You know, and if not income protection because you're in the military, you can't have income protection in the military, story for another day. There is no need for income protection. They'll pay you forever. What a job. Yeah.
The next time you go to make a brew and get the milk out of the fridge, the first thing you're going to think about is income protection.
Yeah. But so just before we wrap it up though, me looking at it from Baz Bank again,
Baz provider.
Yeah, Paddy provider. Right, there you go.
Yeah, okay.
So, how, I take it it's policed. You can't just...
Oh God, I know how.
Do you know what I mean? How is it?
You'd have to run a marathon in under.
Yeah, what do they do though? How do they?
It's rated on, so the things that can make it. So previous medical obviously plays a part.
Yeah.
Your BMI plays a part. It used to be
smoking status.
Smoking status massive.
Massively.
Even vaping now. But it used to be male female.
And I think it's like alcohol and all that kind of stuff, consumption.
It used to be male female, but they shifted they changed the rules for bringing in the balance of like equality. But there used to be a male was more likely because we're daft to die than
But Joe, when she went through her figures, it was statistically true. It's not a bias, is it?
No, it's not. I mean,
but you can't.
I know you can't. Yeah, but that.
It's the world we live in now.
Yeah, well, it is. Yeah, it's crazy.
So you've got that the job you do.
Yeah.
Your hobbies.
So it's all a risk analysis.
And it's in base jumping. So a big thing here is, and I get asked this all the time, and it's a shit thing to talk about. But people say, what if I'm insured now, but what if I do this in the future? Yeah. The insurance company for life insurance will insure you on today.
Yeah.
But in 6 months' time, you decide to a career in base jumping. You're covered. But if you come to me and you've already started that career in base jumping, they're gonna exclude that. Like, you know what I mean? But life insurance is about now, because you might be the fittest, healthiest person, but then pile on the weight. You know,
it's a bit. Have you just talking about your base jumping? Have you ever watched Along Came Polly with Ben Stiller? And he's trying to sell this fella. He's trying to insure this fella.
Right.
And they're in the middle of a thing. He says, "Oh, come up to the top floor." Goes up to the top floor, and he's there for the base jumping off. And he's like doing whatever he can to insure this fella, but he's uninsurable. Go home tonight and watch it. It's hilarious. But it's exactly that. But it's exactly that thing.
Is that it? Yeah.
He's doing whatever he does what he wants to do. Wants him to insure him, and it's obvious when you say it like that they are going to take everything into account. But then how is it policed when you claim though? How do they make sure you as ill as you say, you can't work? How is that?
No, you have to be signed by a doctor,
GP,
you have to have a diagnosis. You can't just phone up and say, listen, I've been in a car accident, so I'm going to have 6 months off, can you send me some cash?
But I take it, is there any, I suppose you would, if it was, I was thinking about
do you not remember the story in the northeast where the guy had claimed on his life insurance?
Yeah, the canoe.
Yeah,
if you not watched that,
I think there's a documentary.
I watched it. Yeah.
It's a Netflix thing on it.
Yeah, it's a Netflix one.
So the cost is going to be fraud.
Yeah.
There's also going to be misdisclosure. So what I mean by that is, so I don't smoke. Passionate, don't smoke, but you did. And actually, did you smoke? Do you smoke or not? And maybe had a drink and had a few cigarettes and didn't count. Well, what the insurance providers says, and this is where they get the negative press wrongly, is they won't pay out because you were a smoker. Okay. Well, actually, what Legal in General, when they came in and explained to me, is like, we get bad press for that, but what we would do is reprice the policy for you being a smoker. So let's say we covered you for £10 a month for £100,000 because you were a non-smoker on our database. But actually you were a smoker technically because you still every now and again occasionally smoked, and we could prove that at claim stage. What they did was they would say, for £10 how much would we have covered you for?
Should you have been a smoker on smoker status?
So that they don't have to do that. They could say you lied, but actually was that just a misunderstanding? You were passionate, you didn't smoke, you know what I mean, but you didn't class yourself as a smoker.
Right. So what would they would still pay?
So it depends. I'm not
I'm
not in court here, but that was an example where they said, "Did you know?" Because we were talking about objections, which is claim statistics is a big one, and fraud has to get reported as a non-payout to the insurance company. So even if they paid out on 99 of 100 policies, but that one they didn't was fraud, that has to be represented as 99% payouts. Yeah.
Madness, isn't it?
But that payout of a partial payout would go down again, but it's not their fault. But they actually did something good by paying 60 grand instead of 100 because their policy would have really been 15 quid. You know.
That's crazy.
Yeah, the insurance companies do want to pay those claim statistics.
Tell them everything. That's what you say.
Is that not like? Surely that's a negative mark on them where it shouldn't be. I mean, that's putting me off trusting them to pay out.
Do you know what? No,
do you know what I mean? Because
smoking's probably too of a black and white example. But it's kind of
non-disclosure is a problem. I think in the industry people say
so. We always say tell them everything, and there's nothing better than when a customer gets a lot of insurance. And the GP has been involved in the process, so they've had a medical report.
I like it when they go for a GP report because they get
imagine you. I've had
so much easier.
My GP report behind you is this big because it came from the military medical records, and it's that big. And I wasn't that bad, but it's all in there. So if they've got access to that, then to make a decision, I love that. Like a mortgage company.
That seems to be so much easier to me.
Well, like a mortgage company,
don't they just...
customers don't tell us everything, not because they're withholding information. They're just telling us what we're asking for and what they think we need to know.
But to cut that out, it should be through a third party in effect. It's like if you go for a job, sometimes you need a medical by a third party.
GPs are so busy. Sometimes if they're not on the electronic system, I've had it where it's 3-4 months before a GP report.
In answer to your question,
but it's in an ideal world.
They will go through the processes of accessing medical records to prove that at the time of application everything was true. Because if you suddenly die of a heart attack, and you'd said you were absolutely fit and healthy, but you'd been at the GP 6 weeks in a row because of having heart palpitations, then
if you're a roofer, you're going to get paid slightly more because you're occupational class than if you sit behind the desk. But if you declare yourself as a desk job, but at time of claim you are a roofer, have been all the time, then.
And the payment, the difference is so minimal.
I was going to say, I imagine it's not going to jump up double, triple.
I mean, it can make it a lot more expensive, which could make someone say, well, what if I'd say that I just work in the office? Do you? No. Well, why would you want to pay for something that's not going to pay out? That's what car insurance is like.
That's what it's
people
about.
don't want a black box on a car insurance. I mean, we were talking to one of our friends because their daughter's just passed the test. And she can save a fortune, but it's her mum's car. She's saying, I don't want a black box on my car.
My son refused to have one. He said it would have saved him £700.
Yeah.
And he said, I would rather pay £700 out of my own pocket to have the freedom to go wherever I want.
Yeah. At
At
what time?
32 miles an hour if I need to.
Yeah.
Every
Crazy,
now and
isn't
again.
it?
But it's the time restriction. So if they drive after 11, it gives them more negative
Yeah.
points on this thing.
Does it?
But imagine having that on your life. There is
Yeah.
another day because it's another chat. There is a policy out there which treats you like a black box,
Right.
and
Let's have
that's
that one.
that's
Sorry,
called, that's a
me.
vitality policy.
Vitality.
Yeah.
Yeah.
But they treat it like that's the kind of what a great business. We're going to insure your life
I
insurance.
think they give you free Apple Watches.
But we're going to give you a discount on trainers so that you keep and
Yeah.
you live for as long as
It's a
possible.
brilliant model.
It's a
I
great,
think it's a great
it's a
model.
great model, but it's a chat for another day.
Yeah, it is.
Very conscious of the time. We've had a great
Yeah.
chat. I'm not even going to let you close with your grilling of Faz about
No,
me.
it's fine.
But
We'll do that next time. Double up.
let's put a bit of pressure on you, and for episode 11,
Yeah.
we want a jingle, don't we, Faz?
Yeah, we do.
It's episode 11.
In
now.
fact, I'm going to refuse
Yeah,
to do another one. unless
but
there's
you
a
haven't produced it, so the jingle, and it'll look good because we were laughing about the jingle that wasn't there, but
I
actually.
did a jingle for you. And you
So
were
wasn't that
happy.
jingle great? Can we rate the jingle? Can you
Yeah.
put your comments on Spotify?
Enjoy the jingle. Yeah.
Share the podcast just because of the jingle, not because we've got the Hands and Faz in with us today.
I'm looking forward to billing you for this jingle anyway, so I've dragged it out that long. It's amazing.
Right, guys, brilliant.
Yeah, thank you
look
very
forward
much.
to it, and
Thanks
we'll
for having
catch
me.
you at the
Yeah.
next one.